John, welcome to another episode of, my Wardle Consultancy Services, Knowledge is Power. Today's really important because it's going to be straight talk with yourself. And, just to let everyone know, if you don't already, this is John Vouris. And he's one of the senior partners at one of the most reputable firms in the country, and now, close to being around the world, Chadwick. So thank you so much. I feel like there's so many questions that I want to ask, which I will. But your knowledge, your expertise, your experience, I really don't know where to start. So John, do you want to just tell me a bit about yourself?
Well, thank you, Chanel. And let me say this, it's a pleasure to be here and be interviewed by someone like yourself. So thank you very much for the opportunity. But a little bit about myself. I'm in my 50th year as an insolvency practitioner, liquidator and receiver and voluntary administrator by trade. I've been in it since 1974 and I've moved over to Chadwick, and I'm one of the senior partners of that firm that specialises in insolvency but does other things. Mainstream audit, business services, corporate advisory, forensic, and the lot, nationally. I must say, my experience with Chadwick is you're the best at what you'll do. Now, there's something that you said to me a little while ago, which is, if you pay peanuts, you get monkeys, all right? I was laughing my head off. I even laughed on the way home by myself and I looked crazy. But it's absolutely true. So do you want to just shed some light as to what makes Chadwick different? Because I come across a lot of companies and, they'll put terms out there like, I'm just going through a small business restructure with my firm and, but they actually don't know what that means or anything. So what differentiates Chadwick to all of these other players in this industry space? Well, we pride ourselves on the outcomes that we achieve.
Yeah.
And look, hopefully we can put the company back. If it's a liquidation or voluntary administrator, first of all, if it's a voluntary administrator, we like to hand it back to the directors. We've done our job, we've done a deal with the creditors, and we give the company back. In other words, we've saved the company. Sometimes that doesn't work out, different circumstances, but we pride ourselves on results.
Yeah, and I think what I love about it especially is I'm pretty open. I'm not a financial advisor, so I will not give financial advice. Do I know a lot about finance? And there's certain parts of finance, especially credit reporting and where businesses can actually resolve certain debt issues that, I can shed some light. But I love the fact that there's been clients that I've had hit my desk and I'm like, okay, this is way over my knowledge base. And the feedback I've had, even up until last week with a particular client that I recommended he contact Chadwick, was phenomenal. Like the experts that you have in the space, the fact that you're so personable, you in particular, nothing you say is so over my head that I can't understand. And that's one of the reasons I was so excited to do this podcast with you. It's just so frank and open and honest and normal layman's in English.
Well, that's who I am. I pride myself on my simplicity. I mean, you're dealing with some directors who are going through a really bad time in their lives, and they don't want to hear about the fluffy sort of stuff. They just want to hear it straight. And if you say to them that this is what's going to happen, you get them ready for the dire situation that may occur. There's no rubbish as such.
Yeah. Now, going into the technical spiel, obviously you are an expert in the field, so I'm going to ask you some technical questions.
Yes.
Just so everyone watching this can just have a greater and a deeper understanding of certain things that you'll do and certain terms in the industry. So first things first, like small business restructure. What is it? What happens? And how can you help?
Yeah, well, as the word suggests, small business restructure. For it to comply, it needs to have debts of less than $1 million. Second point is that you cannot have any monies due to any employees and superannuation. Thirdly, all activity statements need to be lodged with the Australian Taxation Office. So all lodgements have to be lodged with the tax office. And fourthly is that you only get one shot at it. You can't do it multiple times. It's 7 years. If you've done it within the 7 years, it's only new. It's relatively cost effective. There's not as much investigation work done by the practitioner, and it's a good tool to have. But you have to have the four things to comply.
And what are the benefits?
Well, the benefits are that the creditors can get their money, their due,
awesome.
a lot earlier than a liquidation, certainly in a liquidation scenario, and certainly in a voluntary administration or a DOCA, deed of company arrangement scenario. So the good news is about creditors get that money quicker, the deal is done, and there's limited investigation.
Right, okay, and Hall Chadwick can help with
Chadwick can help, and these are small in nature, but we can do the smaller jobs. We can do the larger administrations and the smaller administrations.
Now, this might be a silly question, but a lot of people get really scared about the term liquidation. Nobody wants to say my company might go into liquidation. Or is in external administration. Do you want to just shed some light as to what these terms mean?
Yeah. Well, first of all, liquidation is the end. It's the death knell. And what we do at Hall Chadwick is try every other avenue before you get to a liquidation scenario.
Love that.
And really, it's the last card in the deck. We say to clients, if they can, try and deal with your creditors, try and deal with the tax office. But if you can't deal with the tax office or you can't deal with creditors, there's a system by way of a voluntary administration where the directors resolve to have the company put into administration, and then the voluntary administrator, has meetings of creditors and puts a deal to creditors. Now, if that's not agreeable, it goes into liquidation.
Right, okay. And Hall Chadwick can obviously help with that.
Yes, we can.
So if a director opens up their mail and they've just received a notice to liquidate, what should they do?
Well, have they received a notice from a creditor? If they've received a demand, say they've received a demand, you can still have what's called a creditor's voluntary liquidation, and it's a misnomer in terms. It's not a creditor. The directors appoint the liquidator, and then the liquidator writes to all the creditors and advises them of their appointment. But if the tax office serve a director penalty notice, which they're doing a lot.
Yeah, I'm saying that.
A lot of it's happening a lot as such. So the director has 21 days to either make a deal with the tax office to pay their debt off. He can appoint a voluntary administrator, or he can appoint a creditor. The director can appoint a creditor. They're the three things that can. Or if they don't do that, they'll be personally liable.
Right. So, recommendation would be: do not ignore these notices.
Well, the recommend certainly yes. But prior to that, the director should be in dialogue with either their accountants or solicitors. And if they can't get their advice, they should change. Yeah.
You've touched on a nerve with me, because I speak to a lot of directors and they believe that the accountant that they've had for the last 100 years is great and everything's fine. And then they receive a notice and then they don't know what's happened. So one of the things I do love about Hall Chadwick is you all are connected to multiple different businesses. thousands of accountants. So if you're struggling and you receive notices, or you don't know where your money is, and how the business is operating from an ATO standpoint, and you don't know what the last time your BAS was lodged, you can reach out to a firm like Hall Chadwick, and you can actually direct and guide to the right area that's lacking in somebody's business. Yeah. A lot of people don't know where to turn. So, that's half the issue I'm seeing. They really don't have that knowledge out there, John, and that's why they end up in a pickle with their businesses, So, is that what you're seeing? Is that where...
Yeah, it's easy to blame the accountant, but sometimes directors don't want to pay for that service.
Yeah.
Sometimes directors are all they're interested in lodging their tax returns, doing the minimal work. So accountants can't be blamed all the time, but directors should ask their accountants, what can I do with this? What can I do? Or their solicitor. They should I have on their speed dial their accountants and their solicitor. So they should go to them first. And we always say, if you come to us, hopefully we can solve your problem, but sometimes it's too late. The tax office has already served a DPN on you, on the director.
Yeah.
A winding up notice is there. Sometimes it's too late. But if it's not, we can possibly trade the company out of the difficulties, or appoint a voluntary administrator, or if there's no meat on the bone and it cannot be saved, it's a liquidation.
Okay. So don't blame the accountants.
Not all the time.
So, especially if you're not willing to pay for good accountancy services.
Absolutely.
So you can't blame your accountant if you're only willing to pay them every quarter minimum amounts just to lodge their BASs.
Yeah.
Okay, so directors listening, pay attention. Given that, what would be your top tips for businesses? So I know in the past you mentioned, cash flow, budgeting. What would be your tips for businesses to help them be stable, steady, move forward, expand, grow? What are your tips? Okay,
I can answer that by saying to you that in my experience over the 50 years is that the reasons for failure, the main reasons for failure in a business is bad management, bad debts as such, because when I explain bad management is that directors don't look at the books, so they haven't got any idea sometimes, so you can't help that. Bad debts, that might be bad luck, but we say you can't avoid bad debts, but we say you can minimise bad debts. The other failure is a bad location of the business, but as far what we are dealing with now in modern terms, you really don't need a factory or such, but it might be or a retail scenario. It might be online or so forth. Bad advice. Sometimes directors are given a bad advice. They do it on a whim. They don't look at their records, or don't look at their financial records often enough to make a decision as such.
Okay, and again, is that something that if a director, well, not if, but directors are definitely going to watch this podcast, if any of that hits a nerve, would you recommend they call Hall Chadwick and gain some guidance? What is the best way for a director to sort of fix all these issues?
Yeah, look, we're always in the market for getting work, but my advice to anyone out there is seek your accountants. Go to your accountants first. Go to your accountants first. Give them a go, and say to them, "Look, I've got this problem. I've got this issue. What can I do about it?" And it's a bit like seeing a doctor, as such. If you got a pain and the doctor doesn't fix you, go to another doctor. Go to someone else, or your solicitor. They have to be confident and comfortable with their advisors, and they have to be ultra confident with their accountant and their solicitors.
Right, and if they're not,
give us a call. We're always available.
So I think that's it. I think sometimes you don't know what you don't know. So any businesses that feel, especially where directors don't really know and have a grasp of where their business is at, reach out to your advisors within the business. And if they don't know where it's at and they can't guide you, don't ignore it.
Yeah.
Because it's a spiral effect. The more you ignore, ignorance is not always bliss. I always say that.
Correct.
So, you've got companies like yourself with experts over years of experience. So don't ignore it. Do something about it, basically, Now, we've talked about your tips. What are the biggest failures in a business?
Didn't we discuss that? Sorry. The failure of the bad management, go through that?
Yeah, because you've gone over bad management, so
Yeah.
then we've gone tips. If we go failures...
Yeah. We have to...
Do you need to go back to the DPN one?
Yeah.
Do you need to go back to DPN because you said the director can appoint a creditor? You meant to say the whatever.
Did I? Ah. Okay. Okay.
I've just had a brain fart. DPN is...
The director can only notice. You said
Okay, yeah.
people are getting them in the mail,
Yeah.
and then he said, what are the
Okay.
options? Yeah.
So, okay. So, John, you mentioned a DPN if the director gets a penalty notice
Yeah.
in the mail.
Yes.
Just so I understand and everyone watching, do you want to just elaborate on that a little bit?
Yeah, if the director receives a director penalty notice, that is from the tax office, and they're saying that their debt is due and payable, and the director has one of four things to do. He can pay the debt. The director can pay the debt. The director can get into a payment arrangement with the tax office. The director can appoint a liquidator or a voluntary administrator within 21 days. And if they don't, they could be personally liable for that debt.
And what does personally liable mean?
Well, that means that the company may not, if the company doesn't pay that debt, the director has to sell assets to pay that tax. So it takes that liability, limited liability, out of the company, and it's a personal liability on the directors.
Right. Everyone's really scared of the ATO. Why do you think that is?
Well, the tax office is moving faster than I've seen it before in collecting monies.
Right.
And during the COVID period, there was a period of grace where they allowed companies to trade and so forth. And we call them in the trade zombie companies. And now the tax office is right on collecting their monies, which, look, they're owed money, so they should be able to collect it. And that's what they're doing.
Right, okay. So don't be scared of the ATO. Do something about it.
No, absolutely not. That if you talk to the tax office or make arrangements with the tax office, that's what our advice is. Try and do all these things by paying off the tax. When we see directors who come to see us, we say, have you got sufficient monies? Can you get sufficient monies to pay the tax office debt? And if the answer is no, well then your alternative is to appoint. But we say, try. Have you tried?
Right, okay. Yeah, okay. So don't ignore, try. They're there to listen. They will listen and they can help. But if you're not going to communicate,
No.
how can they?
No, they can't. I mean, if you're going to stick your head in the sand,
Yeah.
and this is why we say, when you get a DPN, and it could be on the tax portal as such, you don't have to receive it in the mail. But if you receive it, speak to your accountant, ask for the accountant's advice or your solicitor, and if they can't help, certainly give us a call.
Okay, so if you've got a good accountant and a good solicitor, they should be able to help. And if they can't, reach out to the likes of Hall Chadwick.
Absolutely.
Because clearly something's
Yeah,
amiss.
absolutely.
When it comes to a DOCA, you mentioned a DOCA, deed of company arrangement. What is that?
Well, a DOCA, by virtue of its name, it's a deed of company arrangement, and it's a deal done between the company, the deed administrator, and the creditors. And basically, a DOCA is that creditors should receive more than a liquidation scenario.
Okay, excellent. Because I know there's been certain situations where I've seen, for example, a company enters into a deed of company arrangement. Fortunately, the directors got assets that they can, refinance in order to pay their creditors, so the company isn't liquidated.
Yes.
So there is sort of light at the end of that tunnel, isn't there?
Yes.
Okay.
It's better than it should be better than a liquidation.
Yeah.
And the beauty of a DOCA is that the creditors get paid a lot more and a lot earlier than a liquidation scenario. And
Because I don't think many businesses know what a DOCA is and even know that they exist. And I know for a fact Hall Chadwick have organised many that have hit my desk, and organised and completed them well.
Yeah.
I think a DOCA is definitely something that companies should really get themselves familiar with.
Yeah.
Because that's better than a liquidation if you can.
Well, a DOCA must come through a voluntary administrator.
Right.
If a company goes into liquidation, you can appoint an administrator, but that's difficult. But
Right.
maybe one other time. But
Okay.
unless you want to talk about it now, maybe you should ask me who can appoint a voluntary administrator.
So, John, at the back of the DOCA, who can actually appoint a administrator?
Administrator can be appointed by the directors, a resolution of the directors, a secured creditor who's got security over majority of the assets, and a liquidator can appoint a voluntary administrator.
Right. Okay.
So no one else, no creditor can appoint a voluntary administrator. It has to be done through those three avenues.
At the back of that, if there's more than one director, do all directors have to agree to appoint an administrator, or can one director appoint because they can see that there's benefit?
Good question. It has to be a resolution of directors.
Right.
So if you've got two directors and you can't resolve, well, then you can't appoint a voluntary administrator.
However, if you're the majority shareholder within the business, you can.
Well, classic one, we've got one recently where three directors control the company. Two have decided to appoint an administrator.
Right.
So that's a resolution of two.
Okay, that
two.
makes sense. Okay, awesome. I think a lot of people didn't know that, so thank you
Yep.
so much for sharing.
Okay.
How was that? Yeah, that ticked it off? Okay. Now...
Should ask me about some of the buzz were like, why should you have more than one director? Or why should you have... How many directors should you have?
Maybe the structure, did you want to talk about structures?
Or is that too basic?
No, because I think that a lot of people don't really know about how to even set it up. So yeah, we'll do structure.
Moment. Yeah. Or why should people go into business?
Yeah. John, I come across a lot of ABN holders, right? They make a lot of money under just using their ABN. But there's also, structures that exist, like a business structure, where it's not an ABN, it's an ACN, So can you just
tell me a bit about structures and the different types of structures and some of the benefits?
Yeah. Well, there's three types of structures. There's the sole trader, and that's probably your ABN, and really relatively small operation where they're making a little bit of money as such, and it's a small situation. Second one is a partnership, and most service providers, when I say service providers, accountants, solicitors, architects, they're mostly partnerships where two or more parties enter into a partnership arrangement. Third one is the corporate structure, which is companies, which are proprietary limited companies, and that means that it's limited by virtue of the shares as such.
And what's the benefit, the cost? Like, I think a lot of people just set up an ABN originally because it doesn't cost anything. What's the benefit of having different structures or having a structural setup?
Well, with a sole trader, the person running the business is personally liable for all the debts.
Oh.
With a partnership, the partners are joint and severally liable for all the debts.
Right.
And then with a company, there's no personal liability unless you incur credit whilst you're insolvent,
And
give a guarantee, personal guarantee.
Right, and that's generally where you would sign, say, a contract, and you are the personal guarantor.
A good example is when you go and finance a car. Sure, it's in the company's name for tax purposes and so forth, but sometimes the finance company want your personal guarantee from the directors.
Excellent, thank you for that. Okay, anything we missed with the?
Just
why? Just on the company, you need to say how many directors you should have.
Yeah. And why would you go into business?
Mm-hmm.
Why would you go into a business? Just
As
ask.
in way of a structure?
No, why would you go into business?
Okay.
Just
rather
ask.
Rather than being a paid employee.
Yeah, why?
Okay, right.
Why do you want to go into business? And also, why? How many? You've heard of 2 or 3 directors in a company. Do you think that's advisable?
Okay.
Because I mentioned 2 directors resolving, so maybe you should come into. You mentioned 3 directors in a VA. Do you like that structure?
Yeah. John, I just want to take it back a little bit. You were mentioning about the VA, and there were 2 directors that agreed to go through that process, and one didn't. What would you recommend, in way of business? How many directors should you have as part of a business?
Well, my recommendation is you only need 1 director. In order to control the company, you can have the shareholders who control the appointment of the director. Because my attitude is have you ever seen 2 bus drivers?
Oh, yeah, no.
No, neither have I. So the director drives the bus, and the shareholders put petrol in the bus so we can continue on.
Yeah.
And with the tax office clamping down on directors, making them personally liable, you don't need more than 2 directors.
Right.
They could all be personally liable if they're served with a DPN.
Right. So it's a bit like the kitchen phrase. Too many cooks spoil the broth. So
too many cooks.
Why convolute something and have too many individuals involved where it's just going to confuse the situation when it's not needed from a structural point of view?
Correct.
Right. Okay. Ticked off? Yeah. Okay. I want to go into, how a lot of people want to expand, and we've spoken about directors and keeping it. How would you suggest, bigger is not always better?
Yeah.
Like, I think that's key, because a lot of businesses now, they want to increase their cash flow because the cash flow is an issue, and they think the best way to do that is to employ 50 staff members. That's not the case. what's a suggestion to get into that?
I think
Because the flow's good.
When you're talking about the structure, we were talking about the structure, lead in by, why should someone get into business? Let him answer that, and then when you go back and say, what advice would you give people looking to expand their
Okay,
operation?
awesome.
And staff issues.
Yeah.
And
Yeah.
deal with stuff.
Because then that goes into the budget and plan.
Correct.
Excellent.
Correct.
Okay. John, just, we were talking about business and directors and limiting liability. Why would somebody get into business?
Well, the only reason why people would be into business is to make money. Full stop. And whatever money you want to make, if you can achieve that goal and you're happy with the way you have your work-life balance, well then that's the reason for being into business.
So nobody really goes into business not to make money, right?
Well, you'd be surprised.
Okay.
but if you're in a business and you've got a company, you've got responsibilities. You've got responsibilities. If you've got staff, you have to look after your staff. I've always said that staff are like stock. If you don't look after your stock, you have no business.
Yeah, spot on. I agree with that totally, wholeheartedly. I think staff are critical when it comes to not only the setup of a business, but also looking forward and where you see the business going and growing. Yeah. On that note, a lot of businesses I come across, they want to expand, but then cash flow's an issue, and I don't know, it's like it opens up this can of worms. Do you want to just talk about what you see in this area, especially with expansion and your tips and what you find are the biggest issues with cash flow?
Yeah, to expand, I mean, obviously your sales, your income needs to increase. So you need to be cognizant of what are the costs associated with that increase, and you need to do budgets. You need to, if you can't do them, you call on your accountant to help you do your budgets. Work out what's the increase of sales going to mean. It's not much use increasing sales and multiplying expenses because you're not making money as such. And for a good business, you have to have good staff and good systems to record everything and monitor the operations of the company.
But that's an easy fix, isn't it? I don't really need an accountant, because if I get the sales in, I'll just get 50 staff members. I'll just put a Seek ad out, and then I've got 50 staff. Isn't that the fix? Or?
Well, the staff might cost you more.
Oh.
The staff might cost you more than what you're selling.
Yeah.
So it's not always an easy. If it was an easy fix, everyone would be doing it. But you need systems, and you need to monitor the operations. I mean, my attitude is that if you're happy and you know it, clap your hands.
Okay, right.
I mean, what does it mean? What's your work-life balance?
Yeah.
What are you doing this for? I mean, okay, if you want to increase in multiple outlets or whatever, you make sure that you make money on those projects.
Right. So work smart, not necessarily hard.
Yes.
And how often should people be touching base with their accountant to see if their business is actually progressing the way it should be? Is it every quarter when the BAS is due? Like what should be the
At a minimum, you should be looking at your accounts on a monthly basis.
Oh, right.
Have a look at where you are. A simple trial balance, a simple profit and loss can be achieved on a monthly basis. You should have a budget. Should have a budget for the year and compare the budget with the actual. You don't need to see your accountant every time you do that, but if you're stuck, speak to your accountant. They should be able to set up a system where you can plug in the figures, and then that should generate a report.
Right. Fantastic. Thank you for that. That takes off.
I think you should go back to, if you pay peanuts, you get monkeys.
Yeah, but I want to tie that into, because we touched on accountants, but part of this is really to flag that a lot of people are getting shit advice. So I want to plug Hall Chadwick in, but I want to do that in way of maybe. Oh, I've got it. If we do go into the reasons for failure, and then at the back of that, this is all preventable, right? Yes, it is. You know, like that sort of thing. Okay, got it.
Yep.
Yeah, got it. Okay, got my head around it. Because I've got it in bold if you pay peanuts, and then you've got that. So yeah, brilliant. Okay. John, we touched on obviously liquidations, voluntary administration, deed of company arrangement, which is shortened to DOCA. Look, I suppose the key here is, what are the biggest, I guess, issues you've come across in your years of doing this, the failures that lead to that, you know, in a business? So what would you say are the key contributing factors that lead to businesses failing?
Well, the major reason for failure is bad management, where directors take on certain products or so forth. They haven't done their costing as such, and they just haven't got any control over the business. Second one is bad debts, where unfortunately they've given credit, and I don't know of any business that doesn't give credit and have bad debts. My advice is to minimise the bad debts. Don't put all your eggs in one basket type scenario. Keep tabs on your major customers. Don't let them get out of coil.
Yeah.
Sorry. Don't let them get too far out. Bring them back in. Bad financial reporting. We've been in businesses where there haven't been any monitoring of the company's activities, none at all until the year end. Bad advice, where they've been given advice on making a product without doing their costings again. Bad layout of their businesses. It might not be efficient, you know, where they're losing time as such in their layout of their factory where they're making products. And also bad reporting. Or did I say that?
You said reporting.
Okay. Or bad products and services. Their products are out of date, and their stock is just dwindling, and no value in their stock.
In way of cash flow, do you find that a lot of businesses just don't know what that means in a business?
Well, cash is king, and the king will always be the king. So keeping tabs on your cash flow is imperative.
So by that, does that mean not the cash $100 note in your wallet, but more what is your daily bank balance? Is that what that means?
No, available cash.
Right.
We call it the liquid asset test. The liquid asset test is where you can turn your assets into cash. I mean, cash at bank, well, it's already in there. But stock and debtors are liquid assets. The debtors can be realised, the stock can be sold, and your current liabilities can be met.
So it sounds like, you know, businesses that have, say, debtors, where they've got this money waiting to come in, they shouldn't really ignore their collections piece or strategy, should they?
No,
Okay.
definitely not. But look at a real life situation where the company needs their customers for their sales.
Yeah.
But when they get to owe them money, well, they need to realise those amounts from the sales. So there's a possible catch-22 with being hard on your debtors because you're being hard on your sales.
Yeah.
There's always a conflict between...
Because you don't want to piss people off, but you need your money.
Correct. There's always a conflict between the marketing manager and the accountant. The marketing manager just looks at sales. The accountant looks at realisations.
Got it. So if the accountant looks at realisations, it's critical that you have the right accountant backing you, and would you say the willingness to pay the right accountant to back you?
Yeah, correct. Well, look at it before we get there. I mean, staff are very important. You got to have the right staff, and my philosophy is you hire long, fire short. In other words, take your time hiring because you need good staff. Staff are imperative to the business. But don't take too long with the employment laws as stuff. You have to give them 3 warnings as stuff. But if you need to dismiss staff, do it quickly because it creates a cancer in the business.
And you've already touched on this, but one of the business failures that you did raise earlier was director disputes. If you've got all these directors and you want to move the business forward, and then all these directors need to make a decision, is that one of the key reasons? You suggest keeping directorships tight.
Could be a key reasons where they've got two or three different thoughts, different ideas about the direction of the company, and we've done in the past, which is not very often these days, is a provisional liquidation where we resolve director disputes where the company isn't insolvent but directors can't agree on where to travel the company, so they appoint a provisional liquidator.
Right, and I guess that's the piece that goes into that whole mediation between directors.
Yeah.
Okay, got it.
Yeah.
Okay, what do you think? John didn't say pay peanuts.
You didn't say if you think it's expensive to hire a professional, wait till you hire an amateur.
Yeah. Okay. Do we want to?
But that's not a.
How do you?
About negotiations?
Yep. So maybe coming in there, you would have sold many assets. You would have sold assets, or maybe ask what does a liquidator do?
Yeah.
What do you do? Yeah.
John, I know a lot about a lot of things, but I have no idea about really liquidation. So what does a liquidator do?
Well, the liquidator appointed has got a couple of things to do. First of all, the liquidator has to get in the assets. Now, that can be grabbing a car, getting the stock, and the debtors as such. They're the assets of the company, or the physical assets could be property. Liquidator has to realise them as best they can. So with a trade-on situation, the liquidator can try and sell the business as a going concern, but if the company has ceased trading, they have to realise them as best they can. And unfortunately, sometimes the only way out is possibly an auction, a liquidator's auction. You've seen that, but that's the last alternative. Thirdly, the liquidator reports to creditors and also the authorities, ASIC, on offences that may have occurred. But with creditors, the liquidator tells the creditors why is the company in liquidation, how did it get there, and whether there are any offences. And most importantly, what creditors want to know is how much am I going to get? The liquidator then distributes the assets of the company. Now, the priorities are, unfortunately, for some, it's administration costs, the liquidator's costs. Employees are a priority creditor for wages and holiday pay, followed by superannuation, long service leave retrenchment, a secured creditor who's got a charge over the company, and then all other unsecured creditors, the tax office, the electricity people, the telephone people, the trade creditors, and unfortunately subcontractors, where we're seeing a lot of building companies going bust or going into liquidation. Unfortunately, subbies are amongst the unsecured creditors.
Yeah, I see a lot of that. So, can I be a liquidator? What should people be looking at? Like, what qualifications should they be asking about, or how do you know somebody's reputable?
Yeah, well, to be a liquidator, you have to have certain qualifications. You have to have a degree from a university, and then you have to work for a firm of liquidators for a number of years and have the qualification as such. You cannot be a bankrupt and be a liquidator, and then you have to apply to ASIC to be a registered liquidator.
Right, so ASIC governs.
ASIC governs the appointment of liquidators.
So, so just because somebody says, I can do X, Y and Z for you, don't fall for it, always ask to see the accreditation, correct?
Absolutely. But there are people out there that, should we mention this?
Yes.
Okay.
Yes. There's organisations out there.
Yeah, there are organisations out there who are called pre-appointment advisors. All we say is be wary of what they say as such, and if you need a second opinion, you should contact, hopefully, us or contact any other liquidator.
Brilliant. And I think, on the fact that we're talking frankly, if people are worried about making certain phone calls, you can always research, guys. You've got Google is everywhere. Everyone can Google and search things online. Instead of taking just somebody's word for it, the pre-appointment advisors, and you're not unsure and you just go with it. Research, are they accredited? Do they have certain qualifications? What is a bankruptcy? What is liquidation? And honestly, when I did that early on in my journey, when I was working with Hall Chadwick to begin with, I had to actually just research certain terms, like what the heck is a docker? I'm glad that you mentioned, don't take heed. If you go to a company, ensure that they're accredited, and don't just sign anything without being certain that they know what they're talking about. And if you're at a loss and you're unsure, Hall Chadwick's a phone call away, so you've got no reason not to make that phone call.
Ask me about negotiation or negotiation. I think you would have sold a lot of assets and so forth.
John, you mentioned, obviously liquidators get involved and then they have to speak to creditors and, all there's secured creditors, unsecured creditors. What exactly is the negotiation piece?
Well, in my history of being a liquidator for many years, is that you never make the first offer. You never accept the first offer, and you make sure you're prepared when you are going to face. Make sure you are prepared. You have all the information available when you go into either buying an asset or selling an asset. In other words, an example is you've got a valuation. Liquidators always have a valuation of the physical assets, and that's including property. And liquidators, part of their job skill is to sell the assets of the company. And the only reason they do that is to maximise the return to creditors. You don't get paid any more, but you have to maximise the realisation process to creditors.
And I guess that's what differentiates Hall Chadwick from other companies. You're very good at what you'll do. Is that right?
We like to think so.
Am I fair to say that?
Yeah, you're allowed to, but I can't.
Okay.
Kathleen, did you want to then do the spotting problems section?
Well, he's already talked about the one.
He has.
I think you've done that.
Yeah, we did that, but I'm thinking if I go into...
You need to go back to the distribution, because you said employees and holiday pay and then super, which it's employees and super.
Right, okay. So employees and super. Okay, sorry. Okay. So the question is, who gets paid?
No, what does the liquidator do? And then you talked about the distribution.
Okay.
So maybe if you can just say the distribution,
Yeah.
once the liquidators realise the assets,
Yeah.
he'll do a distribution.
Yep.
But liquidators get paid first, then
Yep. Okay.
So, John, you mentioned that, liquidators, it's maximising the return to the creditors. What does distribution mean exactly, though?
Yeah. Well, the priorities in a distribution of available assets that the liquidator has sold is that the cost of administration are first, so they're the liquidator's fees. Second of all is amounts owed to employees and superannuation. Thirdly is retrenchment pay and long service leave. Fourthly is the secured creditor, should there be a secured creditor. Normally it's a bank or a financial institution. And lastly, all other unsecured creditors, the tax office, the suppliers of products, and also, unfortunately, subcontractors. And you've seen recently a lot of construction companies have gone into liquidation, and subbies are unfortunately an unsecured creditor.
Awesome. Yeah, the rest of it was ticked off.
yeah, but it's still, you get technical, but there is the balance between the secure creditor and the employees.
What do you mean?
Well, employees only get paid straight out of priority, out of a floating asset.
But
Yeah,
then that's too technical.
That's too
I think
technical.
that's going to go
That's
over.
technical, yeah.
Just saying that, yeah.
Yeah.
That's that one.
I think that's whetted the appetite, because
Yeah.
any director
Yeah.
looking into it, they'll hear employees and shit, I've got 50.
Yeah.
Do you know what I mean?
Yeah.
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 I want to tick off though. I want you to actually say, don't bring a knife to gunfight, don't make or accept the first offer.
Yeah, yeah.
That actual term.
Yeah.
So, because when they do the negotiation piece,
Yeah, yeah.
I loved it when you said
Yeah.
it over lunch.
Yeah.
John, there's a particular phrase, I'm never going to get it right. It's about negotiations. Do you want to just reiterate that phrase for all the viewers out there?
Yeah. Yeah. Look, with a negotiation, you need to be prepared. You need to have all the information available to you. You need to make sure you make a valued decision as to whether you're going to accept or reject the offer. And my tagline is, never bring a knife to a gunfight. In other words, have all the armoury that you need to win the battle.
Love that. Thank you. I love that. That's so good. I love that. Okay. I think you have been awesome.
You should get on stage or something. I'm ready to tell you that I sped home last night over the loop.
No, because I would not have been able to do this though if it was not the fact that you are so. You're clever, but you're so easy to talk to.
What you see is what you get. Did I mention that?
But I couldn't do this.
No, actually.
I wouldn't be able to do this with everyone. Do you know what I mean?
Yeah, but maybe you can say that, if you do need more Chadwick's help, what you see is what he can say.
I'm going to do the close now before you come on, and I'm going to say that.
I know what to say anyway. In all these years, what don't you like about this job? Or what do you like? and what don't you like about the job?
Okay, I'm going to do that, and then I'm going to thank you, and I'm going to say a shout out to you and Hall Chadwick and all that sort of stuff, and then you
Okay.
can say the difference with Hall Chadwick and everyone else is what you see is what you get.
Right.
You know, like that sort of thing. Okay. John, I know that our time is nearing to an end, but I have to ask you, all these years, 50 years you've been doing this, you still look amazing, by the way.
You can't say that.
I can say that, and I will, but, you know, like, what do you love about this job, and what don't you like about this job?
Look, it might be a, squeezy statement or whatever, but I like helping people, and if I can help people, and it's traumatic what these directors have gone through. I mean, they've tried to make a go at a business, and they think it's a failure scenario, but sometimes they can't avoid a liquidation scenario. So I try and make it easy on them by speaking plainly to them, what's the ins and outs as such. And I've always said that if I don't feel sorry, if I don't feel sorry for the poor unfortunate employees that have been hit with this situation, and we have to go into a business and terminate their services, and that's the bad thing about the job. Fronting up to employees and say, look, not only have you haven't got a job, but your entitlements might be in jeopardy, except for gears. I shouldn't say that, but they say that. They're not, the poor unfortunate employees who are the innocent parties in all this stuff. If I can't feel sorry for them, I'd give it up.
I'm so glad that you've been so honest and so truthful and so forthcoming, and I just want to thank you, John, for being you. I think you are a true representation of what Hall Chadwick does stand for, which is really like what you see is what you get, right? Would you agree with that?
Absolutely.
Yeah.
We get the job done.
You get the job done, and again, go back to one of your phrases that I've actually stolen now. If you pay peanuts, you get monkeys.
Correct.
So, I'd rather make sure that if I was ever in a position where liquidation was something that I was discussing, I'd give Hall Chadwick a call because there's honesty, transparency, the right advice and experts at hand. So thank you so very much. And I'd like to actually, again, just say how grateful I am to have you, an expert in this industry, join me today. Is there anything you'd like to say, John, before we close?
I'd like to thank you because I felt comfortable, I hope, in answering your questions. And again, our attitude is what you see is what you get.
Thank you so much.
Thank you.